Accountants, they're great. Fish are jumping into the boat. Business is fantastic, but often they have no idea actually exactly what their clients want and what they're thinking and what it takes to make a really good client experience. Eric Gregg, true or false?
True, with a caveat, which is that there is so much variance from one professional to another, where you'll have one accountant that'll be really tied in and really understand their client needs very, very well. And for every one that does, honestly, Rob, there's, 2 to 3 that don't. And that's one of the challenges I think people have, is that they perceive what clients want to be the, deliverable, error-free, delivered on time, on budget,
Hmm.
and that's really just the tip of the iceberg.
Well, Eric, we brought you on the show because you've done some fascinating research about the client experience and what kind of things clients want from their accountants. So tell us a little bit about you and Clearly Rated.
Yeah, so Clearly Rated is the leading provider of client experience surveys for accounting firms. We work and run the CX programs for north of 100 accounting firms, including about a third of the top 100. And that's a big focus for us, is really helping to shine the light for these firms on, not just how they've done surveying the clients, but how they are doing currently surveying the clients, so that they can really have some of that intelligence as to what the clients really want from them and how best to deliver it.
Yeah. You've come up with this concept, a day one accounting firm. Just define that term for us.
Yeah, this was maybe the most interesting thing that we found in our research in the last couple of years. And it was really inspired by some research that was done by Google and Bain, where they found, just in general within B2B, that about 4 and 5 times a customer will have a list of potential vendors in mind before they ever start to explore hiring somebody. And I thought that, wow, that's a huge number, right? And then even more impactful, they found that over 90% of the time, if they do have that day one list, they ultimately choose a vendor from that day one list. And so, Rob, what we did is we went out and we said, okay, let's find out if that's really true for buyers of accounting services. And we reached out and we did a survey, almost 500 buyers. And we found that not quite as often, but still very often, 2/3 of the time, they did have this day one list. And similar to what Google and Bain found, we found that actually 96% of the time, if they had a list of accounting firms that they were considering at the start of the search, they ended up choosing an accounting firm from that list.
Okay. So the question then becomes, how does an accounting firm get onto that list, right?
100%. I mean, you don't have to be great at math to understand that if 2/3 of the time somebody has one of those lists, and if they do have one of the lists, almost 100% of the time, it's a firm from that initial list. You've got to figure out how to get on more day one lists, right? And really that happens, and we can go into more detail on it, but at a core level, that happens when you are top of mind, and sort of have that reputation and awareness within a really target group. So for me, this opened and just cascaded this whole, concept of, really focused specialization, and thought leadership, and really being present in these communities, not just trying to serve these communities.
Well, on the Accounting Influencers podcast, we give accountants, CPAs, the insights they need to be more influential, more relevant, more competitive in their role, and winning business, bringing on new clients, upselling and cross-selling to existing clients are all a big part of the mix. They make you valuable in an accounting firm if you're generating revenue opportunities. So how does an accountant start to think about being on the day one list, being shortlisted for any opportunities for a potential client?
Yeah. Well, first of all, if you can't say, I am an accountant and focus on A, B, or C industries, there can't really be more than probably 3 different industries that you really focus on.
Right.
You're never going to be on a day one list as a generalist. So you have to really, as an individual accountant, you have to become a part of these communities. And I'll just give you an example, Rob. There's an accountant that we work with, that I've known for 2 decades, and she started out as a generalist. And then she realized that, she, got referred into a couple of uh, beer and wine, so beverage industry
Uh-huh.
kind of. And she kind of leaned into it, and she liked that group. She liked that community. So she started attending all their events. She started looking for speaking opportunities there. And fast forward now, she's been doing that for probably close to a decade. And she's the leading go-to voice for somebody that's really trying to understand the finances of a winery, a brewery, a distillery. And that is her space. She knows more about that and how to make sure that you're building a successful business in that space than probably anybody in the world. And it's a huge opportunity for her.
So I get the idea of specialization, not being a generalist. I also get the idea of turning up to events and hanging out where those fish are swimming. That's where you want to be putting your net or your rod out. But online must play a game. And I guess many accounting firms underestimate the power of their online presence today.
Yeah, you're absolutely right. And what I have seen, Rob, is that I've seen people take and firms take a renewed interest in this. And I think that what we saw was the pandemic forced some people who had really been, marketing themselves or their firms primarily through events, have to think about other ways to do this. How do we, create some of that market presence in a digital environment? And they've never gone back because they found that it's really helpful. It's really successful. Another stat that I think you'll find interesting, even if somebody gets referred to your accounting firm, 2/3 of the time, they will go to your website and to a Google or whatever search tool they utilize, search to find out what other people are saying about your firm and what you are putting out there in a digital environment. So you have to really have this cohesive brand experience that is both offline and online.
I've been saying that for a while to accounting firms to attract clients and saying what you do and having a website that stands out, but also to attract talent and an employer brand to say, here's why we're a little bit different. Here's why we're a great place to work. This online presence. Have you got any further insights into how accounting firms can differentiate themselves with an online presence? Because to me, all accounting firms say the same thing. They have similar websites with similar fonts and similar colors, and they make similar promises and have similar values. How do you get on a list with that kind of approach?
Yeah. So I defy you to find an accounting firm of any size that somewhere in there about us doesn't talk about how important the client experience
Yep.
is. To your point, right? They all kind of look the same. In fact, we did this study across all professional service firms, and we asked leaders of professional service firms, how do you differentiate? And almost 100%, 97% said that they differentiate based on the service that they provide. And then we asked buyers if they thought that their firms in the industries were all kind of the same. And 55% said that they thought that all firms were basically the same. And so we have this disconnect, right? Whereas in the industry, we've drank our own Kool-Aid, right? We know all the things that we do that we think are unique and different. And a lot of times, A, they're not as different as we think, and other firms are doing kind of the exact same thing. Or B, we're not actually getting that through to the clients, the ones that really matter, right? Because their perception is ultimately what drives that component of it. So if you're trying to stick, and really stand out online, it really is about, more about what people are looking for and how you add value early in that process, as opposed to talking about the firm. Our belief and the research suggests this, with now online reviews being second only to a personal referral in terms of how much they're trusted. You have to get really good at amplifying your success stories so that you're not the one that's saying how great you are. It's your clients that you're working with. It's the professional staff that already works with you on that recruiting side.
Wow, I couldn't agree more. It certainly bears out my beliefs on what separates the good from the great in accounting firms. So the accountants, CPAs, that the leaders listening, if they want to position their services better, differentiate themselves a little more, maybe reassure those anxious clients, those unsure clients, to that they are the trusted advisors that can guide that client through economic uncertainty and help them grow the business. How do they position themselves well for that?
I think that what they have to understand is what we've seen in the research is kind of a pyramid. And at the bottom level of that pyramid of what clients and buyers are trying to understand is this an accounting firm that is exceptional at what they do?
Okay.
Okay, that's the first level. And that's the place where, Rob, I would say most accounting firms, most accountants do a really good job. It's their own bona fides. Look at all this work that we've done, all this experience that we have. But then the next level that buyers are looking for is, do you understand me and my unique needs?
Mm,
And this is where, that industry specialization goes deeper, right? It's not just, are you good at what you do, but do you understand how I'm unique and what I need? And then the top of that pyramid is really the proof. So, okay, now I believe that you're good at what you do. And maybe you've convinced me that you actually know something about my industry, my type of business. And now that last piece of it is like, okay, now prove that you deliver. And that's where the online reputation, testimonials, things like that really have an impact.
I love that idea of getting to your client's world, understand their problems, speak their language,
Yeah,
appreciate their
that's right.
world, get to know their terms and their acronyms and their three-word abbreviations and everything else. You've got to live in their world and have a foot in it. Let's talk about price. Accountants, it's a sensitive issue, the billable hour, chargeable fees, and all of this. And price often damages relationships. I've heard that people switch accountants for a number of reasons, but the top three are a price issue, a service issue, or a lack of a relationship. So just talk to us a little bit about those, particularly how price and money comes into damaging or aiding relationships.
I want to talk about this in that same construct that I talked earlier, which is the perception,
Right.
right? And the perception of value on those sides. So I will gladly pay an accounting firm $100,000 a year if I am convinced that they've created $500,000 worth of value.
Yeah.
Right. And so we have to do a number of things in the industry. And first and foremost is we have to show our work. Right. I have a 9-year-old and an 11-year-old, and they only get partial credit if they get the right answer, if they haven't shown their work, so that the teacher can actually see how they got to where they
I'm
got.
a former high
And
school math teacher, so I was always saying to my kids, show you're working. You'll get marks for that.
that's right. Yeah, you may not get the full mark,
Yeah.
right? If you get the wrong answer, but you've actually done a lot of good work,
Okay.
you're not going to get the full mark, but you get something,
So
right?
apply
And
that
if
to
you
the accounting situation then, Eric.
Yeah, so I'll just give you one example. What happens oftentimes in sort of corporate tax is, you have all the pre-work, there's, some questions back and forth, and then there's this huge black hole where, as the business owner or as the financial leader of a firm, you're just sort of waiting for the accounting firm to come back to you. And then they come back to you, and it's like, it's like a magical day where it's like either you owe a bunch more than you thought, or you owe a bunch less than you thought. But never do you actually owe exactly what you thought you were going to owe, right? And so what we need to really understand is, hey, here's what the liability looks like. Here's all the next steps. Here's what we did on your behalf. We looked for this R&D credit, and turns out you guys aren't eligible for this because of this. We're able to find a credit here based on employee retention piece of it. Have you thought about this and this, right? Just show me that you actually didn't just fill in numbers, which I perceive any accountant can do. Show me that you actually understood enough about my business and you worked on my behalf trying to get this number, whatever it is, to be as low as possible, right? And that's just one example. There's countless examples across all the practice areas of places where you can get credit for all the hard work, which takes some of the focus off of that one last piece.
But what happens when things do go wrong? There's a cost overrun or there's scope creep or it ends up being a lot more than it was quoted. Where do accountants go with that, Eric?
Yeah, I think the problem that we see in the data, and where people get really frustrated with that is when they get blindsided or if they believe that that cost overrun was preventable. And this is where, again, if you come at the end and you say, hey, this ended up costing 15% more than what we had expected, that's going to be a very adversarial conversation. If you're going through there, you're saying, hey, I'd like to go and reach out and spend a little bit more time on this. There's going to, increase our hours and the cost a little bit, but I think it's worthwhile because of X, Y, and Z, right? And you're going through there and pushing that as you go. That's really the key, Rob. And one of the things that we've seen is like the impact that communication and the amount of communication and the consistency of communication has on net promoter score or satisfaction is extremely high. And when we've tried to dive in to see like, well, what type of communication, it doesn't seem to matter. It just seems to matter that you're getting consistent updates, communication, even if that update is like, hey, I just want to let you know this is still on my list. I haven't really made much progress since last time, but next week I plan to do X, Y, and Z. Like just communicate on that side. That the industry is so mediocre in terms of proactive
Yeah.
communication.
I want to talk about the referability of accountants and what makes somebody recommendable. But for those watching that haven't come across NPS, you just dropped it in there casually, Eric, but I know this is the backbone of the kind of stuff you do. Just explain to us briefly Net Promoter Score.
Yeah, so Net Promoter Score has been around for about 20 years. It's probably the most utilized metric for understanding customer or client satisfaction. And it's simply how likely are you to recommend ABC accounting firm to a friend or colleague. It's on a 0 to 10 scale. It was developed by a former Bain consultant, Fred Reichheld, in 2003. And it's really been transformational because what it does is it takes this question, this single question on a 0 to 10 scale, and it gives you a number that you can compare both within the industry as well as outside of the industry. So they take that 0 to 10, a 9 or a 10 is a promoter. These are the people that love you. 7 or 8's a passive. Think of them as like satisfied, but not, your raving fans. And then a 6 or lower is a detractor. This is somebody that's not really loving sort of the experience that they're having right now in one way or another. And the Net Promoter Score is just simply the percentage of promoters minus the percentage of detractors. So that score can be negative 100, which is everybody hates you, or it could be positive 100, which is everybody loves you, but neither of those ever happen, right? So a good score is considered 30, exceptional is considered 50, world class is considered 70 or above. Within the accounting industry, the industry average is just under 40.
Wow. So referrals, we see how important they are because that is a trusted introduction and recommendation from somebody. I can see how online reputation works because clients, prospects will do their due diligence. They'll go online, they'll go to LinkedIn, they'll find out what they can about a firm before they make a decision. Is there anything else that came out from your research as influencing uh, the experience or the perception of an accounting firm from a client's point of view?
Yeah, I think that the other things that really come to the forefront, it depends on where they're at in that journey.
Right.
So as a buyer, it's your website matters a lot, right? How easy it is for them to navigate that website, how easy it is for them to understand who they would be working with. One of the things that the research showed with buyers is like, we spend a lot of time talking about how great the firm is. We also need to be spending some time to help them understand who they're going to be working with, not just the partner, but beyond the partner.
Okay.
What are the accolades of that entire team? Because that team becomes the accounting firm's brand. And so on the buying side, we want to spend more time there. Once somebody has become a client, really it comes down to that communication, that proactivity, and really, getting credit for the value that you're creating.
We're in a global world. Eric, does it make any difference where a firm is, the locale that it serves, whether they're on the high street or they're completely remote? Does that affect anything?
Yeah, what we have not found a huge impact on whether that they're remote or sort of the impact around the globe. What I will say is that there are some real significant cultural differences based on how people will look at Net Promoter Score.
Right.
So, for example, if you are in Japan, you answer that question very differently within the Japanese culture than you do, say, in the UK or the US. The Japanese culture tends to answer it very literally. So how likely are you to recommend? And, in the US, that is sort of seen as like, hey, if somebody was asking, would you be willing to put your reputation on the line for this accounting firm? In Japan, that's considered to be like, okay, do I think I know of anybody that I would refer right now? And so the interpretation is a little bit different, but the service model, it's really, it all comes down. This is why I like Net Promoter Score, Rob, is it all comes down to, that gap, positive or negative, between, expectation and experience.
Yeah.
And so as the expectation goes up, that experience needs to go up as well. And, for clients or regions that maybe have a slightly lower expectation, it takes less to exceed that expectation. But that's the calculus you're always trying to do.
And expectations presumably are always going up. You've heard that phrase,
Yes.
yesterday's good is tomorrow's average. And
Yeah.
yesterday's great is tomorrow's good. So client expectations are always going up. They want more for less.
Yeah. Yeah. That's exactly right. And I think we're at a very interesting time where you have a lot of firms that are offshoring major portions of their work. We have these generative AI models that are, presumably making firms a little bit more efficient with their time. But that's a really interesting play because the impact that that's had on firms internally versus the perception of the impact that it's going to have by clients is a little bit of a disconnect, Rob, where most of the firms that we're working with are kind of playing around with some of these tools and kind of on the fringes, trying to make them the repetitive tasks a little bit more efficient. But you have clients that are saying, oh man, this is going to radically change how much, I'm going to need to pay for this and the value that we have on that. So we'll have to manage some of those expectations. I think the next few years are going to be a little bit rocky as people adjust to some of these new norms.
I'm encouraged to hear you say that it's about personalities in a firm and people and getting to know them and building relationships with the team and the advisor. And I work with a few accounting leaders, accounting firm owners to help them build their personal brand. That might mean creating thought leadership to showcase their domain expertise. It might be show what they care about, what they're interested in, what they want to comment on. So that's authority pieces, personal brand pieces, profile stuff. Now, accountants don't like doing this stuff. They don't like being on camera. They don't like writing articles and putting stuff out there. But firms often produce thought leadership. They don't necessarily use it very well. It's not done in a strategic way. Tell us a little bit about the importance of that with the client perceptions of how good that firm is.
Yeah, thought leadership is critical. And I will say the more thought leadership is really focused on the reader, the better it is. And I'll just give you an example. We have a software company. And so if an accounting firm puts out a piece of thought leadership on, maximizing deductions or, keys to ensuring a seamless audit, that's a little bit interesting. But if they put out something that says, the 10 biggest mistakes that growing software firms make in their audits,
Right.
that's really written to me, right? And what we see over and over again is that all of us think that we're unicorns. And the reality is that the 10 biggest mistakes that software companies make, probably 8 of the 10, maybe all 10, are the same biggest mistakes that hospitality businesses make. But my perception is now that it's been written specifically for me. So I think taking that thought leadership and really honing in on a handful of segments is really critical.
So the good thought leaders, the good accountants that embrace some thought leadership or build their personal brand, I guess they're developing trust and affinity with their market. They're demonstrating some expertise, and that ultimately is influencing buying decisions. That's what you're saying.
Yeah, that's exactly right.
What do the firms that want to stand out, what should they be encouraging their people to do? Because in a general accounting firm, there is a marketing department that might push their partners and senior people to write stuff. People might be working in smaller firms or take it upon themselves to put stuff out there. Where would you recommend they start with any kind of external profiler?
Yeah. I would suggest that they pick a place where they have a client, ideally a few clients.
Okay.
And find
Some track
a common
record, I
out.
guess. Yeah.
Yeah,
Or
yeah,
interest.
exactly. So start, let's say that you're, and this just came up on a call that I was on the other day, a firm that had, pretty good visibility with some high profile real estate clients. And so they took one of their leaders or up and coming leaders, and they just said, hey, become expert in this space. And that leader really, started to absorb that space, started to put out things that were written specifically to issues that were facing the real estate industry at that time. Well, then they found, wow, there's actually quite a few parallels with real estate and construction. So let's now kind of, expand that or broaden, and we're going to kind of really take this content to those two areas and really kind of focus on that. And it's been really, really successful for them. And it's been higher engagement, right? Because that's the thing that we don't really think about, Rob, is that not only is it better from a business development standpoint, but you're actually creating engagement. Like, who doesn't like to be the expert in their space? And so when you are taking these professionals that are showing promise and you're encouraging them to become experts in a particular space or a niche, man, it's just a great opportunity for them to feel the most engagement as well, because it feels good to add that kind of value.
Mm. I'm wondering about AI. We don't get very far in a conversation about accountants and technology without mentioning artificial intelligence. We mentioned earlier the economic uncertainty of buying professional services, but there's a lot of technological uncertainty. Did AI and things like this come up in your research, Eric?
Yeah, we continue to explore it, and what I will say is the biggest barrier in the research on it, and we do have some segments on it, but the biggest barrier on the research side of it is that there's still a tremendous amount of uncertainty. You've got about half the people that are thinking it's going to make a dramatic impact in terms of how they interact with accounting firms. So you got about half that believe that it's not going to make that big of an impact. And so I think we're still in this very early phases. But one thing that I will say that has come out from the research that we've done is that it is important to share what you're doing with, utilizing technology to add value to the client and to stay really top of mind. The perception that you're utilizing the leading technologies, including AI, is as important to clients as the actual impact that that has on their services, if that makes
Mm.
sense.
What about first impressions? You can make all the promises you like to a potential client. You sign them up, letter of engagement's done, bank details set up, the work starts. There's an education process, there's an onboarding process, there's the honeymoon period, if you like. What did you learn from your research about how make or break those initial stages are?
That onboarding could not be more critical, right? This is a chance, and any of us that have been in the marketing curriculum at all, understand the concept of buyer's remorse. And this is, you made a decision, maybe in your personal life, you bought a brand new, vehicle, and then 2, 3 weeks later, you're like, why did I spend all the money on that?
Mhm.
I would have been happy with something else, right? The same thing happens in our professional world. And so that onboarding piece, right? We've sold them, we've given them the best version of ourselves. And that onboarding is the first chance for them to see, like, okay, was what they told me it was going to feel like accurate? Or is this going to be a little bit different? And so what we see people doing is really journey, getting feedback throughout the client journey and taking some different paths. So it should be different journey that you take somebody on if they're a brand new client. And how you treat them that first time through is probably should be different than if they've been working with you for 4 or 5 years. Similarly, you have a partner that retires. There's a lot of M&A. So, you acquire another firm. All of these times, like those clients that have just been part of a firm that was acquired, they should be treated differently. You should be getting feedback at a different cadence than somebody that has been with the same partner for the same time, the same relationship for 5 years. It's just it makes sense when you say it, but very few firms actually build out those journeys
Yeah.
differently.
You bring up an excellent point. I know one of the things that annoys clients is being passed from one person to another person. The succession's not there. Somebody has to start again with the client and the relationship's wrecked. Somebody moves on. So some kind of continuity and just joining up the dots is important. That's a CRM thing, but it's a relationship thing too.
Yeah, it is, and it's one of the most compelling reasons why even if you have a partner that's got a great relationship, they should be really bringing other professionals from the firm into that relationship, right? The healthiest thing for the firm is to be multi-threaded on both sides of that relationship, which means that the partner's not the only one from the firm that has a relationship. There's multiple other people that are building relationships, and the CFO, the business owner, whoever it is on that other side is not the only key point with the client, right? We want to be going a couple deep there as
Yeah.
well.
Did you discover anything a little bit novel or unusual about how firms are delivering a standout experience with onboarding? I'm just thinking of the chocolates and flowers and a big welcome and bunting and clapping them into the office. Anything crazy like that come out?
I've not seen that,
I'm not sure if it would even
in
work, but I'm just
yeah,
wondering.
yeah, I've not seen that, but what I will say is, this is a place where positive surprises
Yeah.
go a long way, right? And personalization go a long way. And so things that you could do to show value beyond the billable time that you have goes a long way, especially at the start, because again, those early times, you're really susceptible to big swings, positive or negative. And so the more that you can architect in kind of little wow surprise opportunities, I think the better off you
Yeah.
are.
Eric, this is a phenomenal piece of research. Why did you choose to deep dive into accountants and their world?
This has been really a multi-year kind of strategy for us, and we really are fascinated with the accounting industry in large part because the value of those relationships is so high. For most accounting firms, an average client is spending over $50,000 a year with them, and so each client matters. Some clients, matter a whole lot to a particular firm, and it's really fascinating when you have that environment where every single opportunity is worth tens of thousands of dollars. How you look at architecting and executing a client experience strategy that maximizes that relationship. And so for us, that's really engaging. That's really exciting to be able to play a role and help understand that. And there's just not a lot of research that goes into how buyers and clients engage with their accounting firms. So we felt like there was an opportunity there to really add some value to our target market.
Well, it's a phenomenal piece of work and it is available. We'll put the download link in the show notes and the YouTube description. And quickly, Eric, where might people go if they're not looking at the show notes? That just drop on Clearly Rated website? Is there a particular link?
Yeah, yeah. So if they're dropping on the Cleary Rated website, you can see under our resources, we have a lot that's been written on the accounting industry, including this research, which I should say includes not just the United States, but also U.S., Canada, the UK, and Australia. So we did hit multiple markets globally with this research this year as well.
Terrific. And we know how well the US and Canada are getting on at the moment, don't we?
They are fast
There's
friends.
there's a topical reference for our watchers. Leave us with some encouraging words on the key takeaways here for accountants and firms that want to be more influential, they want to be more relevant, they want to be more professional and effective in their roles, and they want to give a great client experience, and they want to be on that day one list, Eric. They want to be in the mix. They want to be considered. They want to be top of mind for their potential clients.
Yeah, the takeaway that I would leave with is that you cannot be all things to all people. And so if you look at your book of business and it's all over the map from manufacturing to retail to professional services to nonprofits, it's going to be really hard to stand out as the professional for a particular audience. And so what I would say is look within that, continue doing that work. But as you look at your business development, as you look at how you write and things, pick one or two of those spaces that you can really put your efforts and your growth efforts into, and really spend the time getting to know that community. What are the business challenges in that community? What are the unique challenges in that community? And build up a perspective that really overlays your proficiency in accounting with what they really need as businesses. And if you can find that sweet spot where you're able to communicate as the expert in accounting who also has expertise in their business and their community, that's where you really have a great opportunity to add value beyond the billable fees.
Well, Eric Gregg from Clearly Rated, the Accounting Influencers podcast is thrilled to be associated with this piece of research and put some weight behind it and shine a light on it because it's a phenomenal
Mhm.
resource for accountants out there to raise their game with ever higher client expectations. Thank you so much for sharing your insights and your passion today.
Absolutely. Thank you for having me on and continuing to support this whole industry and how we think about serving our clients and building our firms.